The S&P 500 and the Nasdaq 100. In today's video, we got to really go over what's happening here with the stock market, as well as what really happened here with Jackson Hole and kind of what was signaled here as far as interest rate cuts and where that's going to really take the market. Some believe a recession. Others believe this is going to stimulate the economy, at least in the short next 3-4 months. And that's really what we're talking about right now. So really quickly going back into the charts, we're looking at the Nasdaq. Go to the 2-hour chart, see what's happening here. So off rip yesterday, we come in the morning from Jackson Hole. Powell comes out. He says the time has come. Rate cuts are next. You spike up, you dip back down. Everyone's kind of panicking. But again, the same level that we mentioned in the previous video is really all that mattered. It's this little level here, 19.7, right here on the Nasdaq, right? You're clearly still holding that. A strong mount, strong wicks here on the 2-hour, 1-hour charts as well. You go into something like ES, the S&P futures, not just tech, and you look at, I think the S&P looks equally as strong, sitting at that resistance that we talked about, 56.66. Again, another level mentioned there. We go into Dow, seeing what happened here. You actually ended up closing the day higher once again here on Dow, proving that overall strength. And the deeper we look in the market, I think the more and more clarity you get of this is still a lot of residual strength in the overall market. And that's what we have to talk about here. It's not about being biased and being impermeable, this and that. It's about interpreting the data that's put right in front of us and understanding how to trade based off of that data in the short term as well as the long term. Okay. So really quickly, we're going to go over what's happened from Fed Powell and what was said there. Essentially, he said, right now, the time has come. And this is what I said in the previous video of interpreting what the Fed has been saying to us. If you guys do not follow on Twitter, I recommend doing so. I'm just going to tell you that right now. So again, if you go to Twitter, I literally said this about a day ago, right? I said, be patient here, but be very cautious of this action prior to the meeting. The dip is what I was talking about. Remember what the Fed has continued to say. They want to see in the market and what the market has been giving us data-wise. Stop overcomplicating what has been said for the past 2 years. The link for my Twitter is down below. Again, all the updates throughout the day are there. Now, again, what the data has been showing us is that inflation is moving in the correct direction, and this is why Powell said the time has come for those rate cuts. Now, where things get a little bit over the top is trying to predict the size of the rate cuts now, because now you have this idea that a 50 BPS cut is happening at the first meeting. I'm not going to jump to those conclusions. I think that's a dangerous game to get to. I think the higher we price in a 50 BPS cut, the more we kind of set ourselves up for failure, or at least the initial reaction at that next meeting. I'm going to tell you that right now. So that's where we're at right now. But we do expect about a 90 to 100 BPS cuts by the end of this year. So that does price in at least like 150 BPS cut. So that's very important to understand what I'd be looking at right there. Again, big things happening there. Now, the other side of this, of why we think rates, and if you don't understand what's happening with rates and the importance there. Now, not only do rates affect stocks, right? Like companies like Apple or NVDA, where they really affect the stock market is when you get into smaller mid-cap names. Names we talked about, like, for instance, Upstart is a big one that's been affected. Basically, companies that rely on loans, interest in general, right? And that's a lot of these mid-caps because they're trying to grow. Now, Upstart is a company that relies on people getting loans from them, so they are directly involved in interest rates and the cost of borrowing money. Now, the biggest part here we've been talking about, though, is the housing market. And when we look at the housing market, this is the mortgage rate, 30-year mortgage rate over the past 5 years. Now, we've seen this been in a straight incline since 2022 from 3% all the way up to around 8%. Now, we've been steadily declining since we peaked out here of October 2023. Obviously dropping back to the downside. And in my opinion, you look better and better, clearly showing that decline. Now, we also know back here in October, once October passed of this past year and we started dropping on the mortgage rates, well, guess what else happened? The market started spiking, right? This is not just an opinion. This is facts. Okay, it is what it is. We go back to October. Again, it's kind of crazy. You go back this far to October. Right here, you dropped. You bottomed going into November. The market went straight up once the housing market started getting a little bit of, signs of life, if you will. Now, what happened yesterday, because this is important that we kind of draw all this together, is not only are people saying, well, mortgages are dropping, but houses, we're going to be in a recession, guys. We're in a recession. No one's can afford to buy houses right now. I would argue the actual opposite. Home sales rose for the first time in 5 months in July, going into the summer. Yes. I'm telling you right now, again, the more we see mortgage rates drop, which they will continue to drop as long as cuts are on the table and cuts happen, I'm telling you right now, what's happening here is only going to continue. Home sales will continue to spike, and you might actually see the real estate market catch on some fire in the short term. Now, is this good in the long term? Probably not. People locking in new mortgages to higher rates. I don't think that's a good idea. Not going to lie. Now, I do believe mortgages will get closer to 5%. I think that is a high possibility in the next 3 to 4 months. I'm going to tell you right now, mortgage rates probably drop down to 4%, at least on the 30-year fixed, especially as we start dumping in these cuts. Now, will they regulate there? That's a conversation for another day. But that's what's happening already. And so we need to be understanding where we're at and what's happening. And as long as the housing market looks good, I'm telling you, the stock market will probably look even better. Don't believe me? Just watch. Shout out to Bruno Mars. Love that guy. So that's where we're at right now, and that's what's really taking place. So again, you see the housing market, stimulating, SPY looking very good here. And again, kind of things happening according to plan. So really quickly here, just going over the charts, giving you a few levels to be watching. SPY is really simple. Above 560, I have us pushing into all-time highs, 565 locally. Really simple. Yeah, you're already kind of there. Q's amazing hold, right? If we were looking for like 478, 479, you mounted that level here on the 2-hour chart yesterday. You can see clear holds across the board. I have you pushing into 487 most likely next. So really good looking chart there as well. I think Nasdaq, obviously I look a lot of NQ and I like looking at futures because it's just more reliable as far as those levels as well. Holding above 19.7, in my opinion, has this pushing back into 20K. We get back above 20K flat, I have you pushing into 20.3. That's where I got us next. So again, big levels I'm watching there. You look really good. I have ES and S&P and Dow futures pushing in all-time highs right now. So you look really good. Now the other side of this market is like that fundamental viewpoint too, the dollar. And again, people worried, like, okay, we're dropping. Once they announce rate cuts are happening, we're dropping. Debatable. You have the dollar dropping back down to your massive support. If the dollar loses this level, you're going to drop dramatically. The dollar is going to weaken dramatically. And you have your 200 weekly SMA there. So a big support here in the dollar. So we'll see what happens. But so far, the dollar signaling that risk off environment as well. You go into the 30-year yield, another good measurement of what's happening with mortgage rates, that area of the market. Well, guess what? What have we been saying for the past, I've been saying this for like the past year. The second, sorry, I'm a little sick, guys. My son, I couldn't make the video yesterday. My son was we had to take him to the hospital for some blood tests. But look, I'm telling you, we've been saying it for a year. Under 4% on the 30-year yields, and the market can catch some fire. Okay, what happened when you bottomed the stock market back here in November 2022? The market started catching fire, and you found your bottom over the next like 6-7 months. Same thing here, guys. Get below 4%, and you look hot. You look hot. Now, the other part of this too is TLT. Again, another area of the market that people should be paying attention to. TLT finally broke back above the 200 SMA and is working its way back into the 200 weekly SMA near 117. Again, these are all areas of the market where I'm looking at. I'm like, okay, the buy signs are there. Like it is clear as day. Buy, at least right now. Okay. And so again, I remain confident with where we're at as far as broad markets, what I'm looking at and how I see us moving forward. Okay. I've been pretty bullish. Don't get me wrong. But as I look at this right now, all signs still point to the upside. The only question mark is a little bit of the election stuff. I don't love buying into the election. Not my favorite thing ever. But typically after the election, going into December, into November, we heat up dramatically. So, yeah, also kind of love that. So these things are looking really good. Could September to October be volatile? Probably. But still, you look amazing. So, again, VIX is still like $15, $16. Worth mentioning, not super elevated, like above 20, but still kind of high with us pushing back in all-time highs on SPY. So again, other big things to be looking at. Okay, now really quick, guys, we're gonna go over some options as well, but I do want to give a shout out to real quick to Moomoo. This is a sponsor of the channel. This is the broker that I use, so you're gonna see me mention and go over Moomoo in every single video because I'm looking at their options chain. This is what I use for all my trading. So if you see me on Twitter or TikTok, anything like that, or if you're on YouTube, it's always using their platform. So again, I think they're some of the best in the game. They have not been going down while all these other brokers are crashing. Support's always on the line. and they just released their cash accounts as well. Again, they're a publicly traded company as well, so you can also, if that means something for you. So again, check them out. The link is down below. If you want to support the channel, do what you gotta do. So again, we're gonna go over some stocks really quickly. Number one, we have NVIDIA earnings. Probably the biggest stock of next week is gonna be NVIDIA. As you can see here on NVIDIA, you're pushing back into highs basically. And I want to go really quickly back into like the 1 hour because I think the chart here looks a little bit more interesting. As you can see here on NVIDIA, you're trying. Like we are trying to get out of this. Like you're this 130 little level here trying to break back out. Now the question with NVIDIA is, can you really get the break? Can you really get that continuation? Like the 133 level has been a little bit of a pain in the butt. Can we start breaking back out? Now I'm not buying NVIDIA up here right now. I'm going to tell you right now. Now where I was buying NVIDIA, where we were screaming it from the rooftops over and over, was down here. Now also too, guys, I don't do this to flex the muscles or anything like that, but we were saying in Discord for literally, we were saying in Discord, we were saying on Twitter, we were saying everywhere, right? We were telling everybody and their mama, NVIDIA dated positions, January 16, 2026, 95 calls, right? Jay's been posting these nonstop, right? Even while I was gone, Jay was posting these. Like we were going crazy on these, right? Guys, when you're patient, you get some of these setups, you have massive, massive opportunity, right? I can only say this so many times. They've been killing it in Discord. Spots open up beginning of the month. But anyways, guys, and I'm telling y'all, this guy's up $2,000 net liquidity on it's like 11,000, right? So a lot of these people, again, and those are risk-free positions. Like really understand the risk that is not there, right? So that's under the part you got to understand there. So anyways, make sure you're paying close attention, guys. Some big setups are coming there. So yeah. Okay. NVIDIA, I love them. Earnings coming up, but again, not doing too much right now. Okay. I'm not going to go over those options right now. Not super interested. AMD. AMD is probably one of the more interesting semiconductor names here. Top two that I'm interested in, besides obviously NVIDIA with earnings. AMD gets back above and holds above the 200 SMA 157.5, 158. I have you pushing into 164 pretty easily. Now we're going to look at some of the option chains coming in there as well. So we go into AMD. And when you look at what's happening here, again, I think time is like kind of your best friend here. And I say this all the time, but I want to put more emphasis on why. Time is your best friend here because you have so much room. So it's not like you can scalp these, don't get me wrong. But if you get above 157, like you have a $7 shot up, and then you have, you're illiquid this whole drop down, massive gap. Like there's just the reward opportunities there. Especially if we expect the stock market to go back into all-time highs. So, yeah, I can capture a shorter-term move. But if I go shorter dated, then yeah, like I'm going to try to capture a shorter-term move. The end, I'm probably not going to hold. But like if I go for something, again, and these are getting more and more expensive. That's the dangers of waiting so long, but it is what it is. You give yourself that potential, right, to really make the money there. Now, what I like is closer to, again, to October 18th. Close to in the money, maybe a little bit out like the 160s, $9. Again, I think the opportunity is just clearly there. It's just my opinion. Do what you got to do. But yeah, this is my opinion. I think AMD is really hot once it gets above that level. I don't think they're that expensive. I think the risk reward there is also really good. Now, I said it was my top two. My next one would be ARM. Has been one of our top names over the past year. So ARM above 136 is a clear buy for me. I think it's a huge opportunity. I think you have room back into like 148, give or take 149. Let me bring this level down here so you can just see a little bit more clearly, like 149, 148. I'm going to bring it down a little bit more conservative. So that's, again, my personal opinion. They've been moving very good. And I think when NVIDIA does well in earnings, ARM is going to really move off of that. So, again, ARM is a little bit more expensive, but it's a lot more volatile than AMD. So you're going to get a lot bigger moves on ARM. So this chain can be a little bit funky, a little bit scary. But, again, I like them. Like, you're going deep out of the money like a 160, and I'm not recommending buying a 160. Dude, you do your own research, but there's a high possibility the 160s get in the money quickly if NVIDIA prints on earnings. Like, you have to understand that. Like, ARM can have $20 to $15 days just like that. So understand what you're trading, what you're looking at, and understand the risk that's there as well. You can even go a little bit further dated on ARM as well and go out of the money also. So again, understand what you're trading, what you're looking at. I like ARM a lot with NVIDIA earnings. I'm not in love with the NVIDIA stock trade this week. NVIDIA trade was a few weeks ago. That was when you had your opportunity. Now you have to look at other names because you're moving up so much. Microsoft also, someone asked me about this. I think they're trying to troll me. So again, something that I mentioned on Microsoft was really simple here, right? I said, I love Microsoft. You're above your 200 SMA. But the biggest thing here is you got to get back above this low level here. Not the level here at 433, but right here at like 431. So until then, you're going to be volatile, right? As long as you're above the 200 SMA, you look fine. But you're going to be volatile. Above 431, I think it's a clear-cut buy. I think you break back out. I think you push back into 445. So yeah, maybe I didn't make that clear. You can go rewatch the video though if you don't believe me. But I definitely put the emphasis on that level and what I was watching for there. Microsoft's a little bit more expensive, but the biggest thing here on Microsoft is you have some distance to get back into all-time highs that I think you're still getting a lot of like real value there. Worth mentioning, all-time highs here are back at 470. A 460 for October. I'm not telling you to buy those. You can go a little bit more data. Maybe even like November contracts of 460 is only like $6. Kind of crazy. All-time highs on those was like freaking over $30, I believe. So worth mentioning, be watching, be paying attention. So again, another really good setup there as well. So what I'd be watching there. A little bit further than that, the mid caps I've been mentioning as well. My favorite small and mid caps, Robinhood. Again, we called this one out. I haven't been super active in Discord over the past month because obviously my son was being born. We were building my new house. We just finished most of the house. So we're going to do a few little things, but we're in the house now. Was Robinhood. Something I mentioned, guys, is that Robinhood was my favorite trade. I thought it was a clear-cut opportunity. Mentioned it right here. Robinhood 2025 hood calls for January 20s. But yeah, they went bananas. We bought them down here near $18. It went past 21 right now. So they're still cruising. But Robinhood, one of the biggest names we've been talking a lot about here on the channel. Y'all know I love the stock. Bouncing the 200 SMA, free money there. The next one is Upstart. I still think Upstart's on cruise control. Less of a buying opportunity now. I mentioned it a lot here as well. I'm targeting 149. Above 49, you could start popping off again, but be on the lookout there as well. I think Affirm is probably my new one that I'm watching a lot now. If you don't know, Affirm had that deal with Apple for buy now, pay later. So Affirm's business should uptick there. You're looking for earnings coming in next week as well. If you start holding above 131.5, I'm looking for the 200 SMA test over the 200 SMA. It looks a lot like Upstart in my opinion as well. I think Upstart has more upside short term. But Affirm, we need to see those earnings pick up. That's what we need to see there on Affirm. So that's what I'm looking for, to get back to at least in 200 SMA, then break above that. That's what we're looking for there. Nothing too crazy. Next up, CAVA. CAVA is no longer a trade for me, guys, unfortunately. I mentioned CAVA quite a bit here. I mentioned it saying it was one of my favorite plays down here. You started bouncing. Obviously, earnings happen. So, CAVA looks great. Up into 121. We knew it would break eventually the $100 level. Once it did, we get kind of parabolic, and you did just that. The next one, too, Reddit. I think Reddit's probably one of the bigger opportunities down here. I think their earnings are going to continue to perform. I think it's kind of just the tip of the iceberg where they're at. Kind of CAVA-esque for me. If it breaks above 75, probably is going to push like crazy as well. I love this name. Big fan. I think you're getting some value cheap down here as well. I'd be watching it. Big fan down here. Sleeper alert. Again, PayPal is like one of those stocks that it's a love-hate thing. I hate it more than I love because it never broke above 68 for ever. You held below 68, and I said this all last year as well. Above 68, it's a buy. 68.5. So we rejected 5-7 times here. Well, you broke above now. Now we're looking for a retest potentially, but above 68, PayPal looks good. I'm going to tell you that above 68, PayPal looks good. You're targeting around 76.5, and then over that you can get parabolic. So PayPal's numbers on paper, they look good. They just aren't innovating or doing anything crazy. They say they're innovating, and then they do nothing. So that's what I'm looking at there. That's what I'm looking at in the stock market, guys. A little bit of a longer video. I tried to make it quick. Did not make it quick. I appreciate you guys. Again, if you're looking at our indicators or anything like that, the link is down below as well for our indicators. But again, Discord spots will be opening up the first of the month. I'm excited to be back. Follow on Twitter, guys. More updates, more stock charts, and hopefully we make a lot of money here in the next few weeks. Have a good one, traders.